Hey folks, imagine losing a third of your money overnight. Terrifying, right? But here's a secret. Every successful investor has faced exactly that and still came out wealthy. How? It's all about how they reacted. Today we're talking about investor panics, those moments when it feels like the financial world is collapsing. I'm here to show you why how you handle those panics will decide your lifetime wealth. First, let's be clear. Wall Street calls big drops corrections or bear markets. But let's be real. When the market plunges 20% or more, that's not just a correction. That's a panic. Investors freak out. They sell. They lock in losses. And here's the kicker. These panics happen regularly, on average every 4 or 5 years. Sound scary? It is. Until you realize every single one ended the same way. Markets recovered and grew. Think about it. Dot-com bubble. Markets crashed nearly 50%, then fully recovered and soared higher. The 2008 financial crisis, terrifying 56% drop, but just a few years later, markets at new highs. COVID crash, lost a third in weeks, but rebounded completely in months. Inflation fears in 2022, another swift recovery. Folks, history isn't whispering, it's shouting at us. Panics never last. Here's where it gets serious. The market recovers, but not all investors do. Why? Their own reactions trap them. When markets plunge, it's human nature to panic. But here's the math. The average panic decline is around 32%. But guess what? Those losses aren't permanent unless you make them permanent by selling out. Imagine missing the recovery because you sold out during fear. Imagine the regret of locking in losses permanently. That's the real risk, not the panic itself. But there's another thing most investors miss. Recoveries don't happen slowly, they explode upwards. Missing just the 10 best days in the market over 20 years cuts your returns by more than half. Think about that. A few days missed means a lifetime of lost wealth. Don't fear the panic, fear missing the rebound. Because history proves every panic ends not with a whimper, but with an explosion upward. So, how should you react when the market panics? Here's exactly what successful investors do. Stay calm. Recognize panic as normal, temporary noise. Hold quality investments. Own great companies. Great businesses survive panics and thrive afterward. Remember your long-term plan. Wealth building isn't about timing. It's about time in the market. The math is clear. Stay invested, stay calm, and your wealth will compound faster than you ever imagined. I want to tell you quickly about two investors from the 2008 crash. One sold everything at the bottom and stayed in cash, waiting for safety. The other stayed calm, held their stocks, and even bought more. Fast forward 10 years. The investor who panicked, their portfolio never recovered fully. But the calm investor, their wealth quadrupled. This isn't opinion. It's math and real life. Folks, investor panics will happen again. But now you know the truth. Panics are temporary. The market always rebounds. Your reaction, not the panic, determines your lifetime wealth. Don't let panic rob your future. If wealth is your goal, own great businesses. Everything else is noise. Ready to talk more about your financial strategy? Click below. Schedule a call with us, and we'll help you build a plan to weather every panic. Remember, stay calm, stay invested, and stay wealthy.